All right, for all you guys that trade the S&P 500, okay, the SPY, aka the SPY, huge rally today, man. Dino Bars called it, turned green at exactly 8:31 a.m. And what I'm going to do is I'm going to show you here the power of retracements, whether they are shallow retracements or deep. I think you're going to find a lot of value in properly drawing retracements on your charts. All right, let's do it. All right, what's up, guys? It's Mark here at Dino Trading. Hope your trading week is starting off well. And I got a question for you guys. How many of you guys thought that today was going to be a big sell-off in the market, right? Due to all this weird misinformation that's coming out over the weekend about Trump's corona diagnosis, right? One day he's sick, next day he's not sick. Nobody has any idea what's going on, right? So what I think a lot of retail traders position themselves going into the weekend and certainly today, I think a lot of people were trying to short this market, man. I really do. That is why you saw today a just rip your face off type of rally. I mean, I feel sorry for anyone that tried to short the market today, right? Because you essentially tried to counter trend trade, right? Dino bars are showing green. Boss, you are looking for potential longs. End of story. Okay, so never ever try to pretend or act like you're smarter than the market. Nobody is. Not me, not you, not Goldman Sachs. Nobody is smarter than the market. All you can do is wait for a signal. In this case, it happened to be green. Okay, exactly 8:31. That's typically the time that you want to be at your computer and trading. I mean, if you're not at your computer at 8:30 in the morning, I don't know what you're doing, right? You're certainly not trading. But identifying the direction is only half the battle, right? We still need to do what? Capture the high, capture the low of that bar, and we want to wait for price to dip back in, what I call retrace, into the retracement zone. And here's what I want to talk to you guys about, okay? Check out the difference between this retracement here, okay, and Friday session. Can you see this one here? Really, really deep retracement, all right? 60 potential S&P points on this trade, right? And then today, we get kind of a shallow retracement, right? And people always ask me, hey, Mark, how do you tell what's the perfect retracement? Here's the truth, man. There is no perfect retracement. Right? All I can tell you is that if it's within the zone and you feel like the market's about to prime for a rally, you got to just position yourself and take what you think is a low risk trade, right? So to do that, everyone's always asking, how do you do that? How do you take the trade? Well, you got to have the micro chart. Okay, I've called mine T-bars. You can use any number of micro charts you want. But the reason that I like the T-bar charts is it's very, very good at telling me where my stop should go, right? So watch this. First thing we're going to do, we're going to identify the zone in the T-bar chart. Watch what I do here, okay? I'm going to pop in this zone, all right? I'm going to pop in both of these lines into the other chart, the T-bar chart, okay? So now if I go back to that T-bar chart, okay, lo and behold, we've popped in the retracement zone. Makes sense? So again, guys, this is not complicated, okay? I know a lot of people out there like to make trading complicated, but all I've done here is a three-step process. Number one, identify the direction, which is wait for a green bar. Number two, draw your zone, right? That's where we are here. We've drawn our zone. And number three, I think you guys know what comes next, right? We want to do what? Let me stretch this in here, okay? We want to draw pivot points on every bar. We then want to connect the pivot point via a trend line in this fashion, because remember, guys, this is the fashion of a bullish trend line because we're looking for price to smash out to the upside of this trend line as long as it's within the retracement zone. Makes sense? So if I squish this in here now and we speed this up, I mean, you can see that this thing just took off like a rocket ship. I mean, we tagged 3,400 on the S. Unbelievable, man. 50 handles, right? From bottom to top. And something like 40 handles from our potential entry, which happened right there where the trend line broke. Stop goes in, one tick below the swing low. Remember I told you guys, why do I like the T-bar charts, right? because it tells me exactly where my stop should go. It's not a random area in the chart, right? It's exactly where your stop should go. The most recent swing low, and this thing did nothing but just take off for 40 handles on the S&P. And of course, for those of you guys that are not aware on how profits are calculated in the futures markets, well, it's just simple. You take the number of points and you multiply it by the increment, which is per point. So 40 points today on the S&P times 50 bucks a point. I mean, that's $2,000 potential just on one contract. You can imagine the potential on trading multiple contracts. And again, guys, the only thing that we did was wait for a signal to tell us what direction we want to trade. We wait for the pullback, okay? We look for a low risk setup, just like we did here, and we let the market do the heavy lifting for the rest of the day. Let all those morons who tried to short this rally and use their MACD and their Bollinger Bands and whatnot, forget those guys, all right? They're never going to figure it out, all right? This ability to forecast a trend before it starts, I'm telling you guys, my humble opinion, this is the secret sauce and the holy grail on how to look for low risk, high reward setups. All right. Hey, thanks for watching. See you on the next trade.